And we are live. Good to see you today, my EOS Podcast friends. We are here with Extra from LD2. We have a really interesting silver-backed stable coin, a new generation of honest money, asset-backed crypto that gives you vaulted physical ownership, redeemable precious metals that you can also trade. So what's really interesting about this is the story behind LD2 and the Liberty Dollar. So we're going to dig all into that and just money in it itself. Let me give a shout out to our sound guy, Scott from Hybrid.Games. He is a sound engineer and is also doing a really cool project on EOS called Hybrid.Games, where he's playing with the with sensory and games and blockchain. So that's cool. And then EOS Writer, of course, this EOS Writer is partnered with the EOS Podcast. So if you're looking for good media, up-to-date, quality, honest, trustworthy, finally real media, EOS Writer. So check that out. So without further ado, this is the EOS Podcast. We have Extra from LD2. Extra, go ahead and introduce yourself.
Well, thank you very much for having me. So my name is Extra von NotHaus. I'm the co-founder and CEO of LD2, which, as Brandon mentioned, is a silver-backed cryptocurrency based around the model of Liberty Dollar, which my father invented in 1998 and launched his first version of a digital currency in 2003. And so we are bringing that model of sound money to EOS and to the crypto community in general. And so I'm happy to be here and excited to talk about EOS and what's going on, because I'm pretty excited about it from the last meetup and such.
Yeah, I mean, we just got to see each other in San Francisco at the big EOS meetup, the Tulip Conference, like kind of the 1-year anniversary of the EOS launch. So it was cool to meet you out there. And then the reason that I brought you on the podcast is you had some amazing stories, and I was like, you should talk on a podcast, man. You got all kinds of interesting stuff. So, yeah, welcome to the show, man. And what do you think? What's most interesting to you about EOS right now?
Well, I think that there's, obviously a lot of well-deserved hype around DAX and the distributed autonomous community, like the EOS stack and so forth. And certainly the one that CSX did on the mainnet was a monumental movement. But I have to say that for me, having been in crypto since 2012, what I thought was most interesting about being at the EOS meetups, and I've gone to the last couple ones, the World Expo in San Francisco, and then obviously the BP Summit, was the kind of the sense of community, I think crypto in general is very tribal in a way, and there's a lot of factions that hate each other, and SV versus Cash versus Classic and such. And for me, the EOS meetups and the EOS community seems much more like the early days of crypto when I started going to meetups in 2012 and 13. And that's kind of what I missed to a certain extent about crypto, is that it's not about us fighting each other. It's about us working together to fight for the greater good, And, I was really taken by how supportive everybody was. And I don't necessarily feel that when I go to Bitcoin meetups or crypto events and so forth. So as much as there are great technical things going on with the BPs and the DAX and a whole bunch of other stuff, to me, the community was much more, and the support by the community was much more striking than any kind of technical advancement or anything like that. Which it resonates with me. Let's put it that way.
Yeah, absolutely. And from a venture capitalist standpoint, you hear about a lot of venture capitalists. One of the greatest VCs of all time, Chris Sacca, he based his investments only really minimally on the project itself, but on the people. He would invite them up to a hot tub in Tahoe and spend the weekend with the team and see what the team was really all about, and then would invest based on that. So not that EOS doesn't have arguably some of the best tech, but the people that drive projects are what really makes success. So I'm on board with that. And then, but the bigger point you're hitting there is these core values of crypto. The reason that a lot of people, us, are in crypto in the first place is this bigger, there's something bigger going on that we stand for, that I stand for, that I want to be a part of crypto. I want to do this because there is a possible change. There's this opportunity to possibly take some of our rightful ownership of ourselves and our power and our money back. And that bigger picture is what it's about. And I think that's why you're in it too.
Yeah, I mean, I think that, in a lot of instances, and crypto and EOS certainly exemplifies that, is technology is a avenue or a means to an end to a certain extent, right? So if you have a philosophical outlook and you want to execute that, or you want to facilitate that in some way, technology is just there to help that facilitation, right? It's only there to do what you want it to do, right? And so, if the community is coming from a position of, we want to make things better, or we want to make things different, maybe is a better way of putting it, then the technology is there to help you, right? But the technology can be used for nefarious reasons just as easily as altruistic reasons. And I think that's the interesting thing that I've always loved about blockchain and Bitcoin, or the crypto maybe is a better way of describing it, is that it attracts those types of individuals who have that same philosophical alignment, about what they think things should be, what they don't like about the current structure, all the problems that come with the current monetary structure and monetary policies. And so to me, that's what's most interesting about EOS and crypto in general.
Yeah.
And the technology is there to facilitate or aid in whatever ends you're trying to get to, and
so what are you trying to get to? I mean, what's your philosophy, and what are you trying to get to? Because that's probably a good segue into what Liberty Dollar 2 is.
Right. So, I mean, so stepping back for a second, to what my father worked on, as kind of a segue into this, is that, my dad was running a manufacturing business. He ran a private mint in Hawaii, making gold and silver coins. And he was always interested in money and so forth. And he just saw that the monetary policy of the Fed and the realities of the Fed structure was just eroding wealth from people, and only promoting the smallest 1% to be rich. And so in 1998, he launched Liberty Dollar as a physical currency with certificates, just like the U.S. dollar are certificates technically. And they were all backed by silver. And so he started in 1998, and we were a family business at that point. And he essentially left the family business and bought a Cadillac and filled the Cadillac full of Liberty Dollar certificates and marketing material, and started driving around the country. And he knew that it had to be a grassroots movement, and so he drove around going to small businesses and friends of his, asking them to use Liberty Dollar as a replacement, essentially, for the U.S. dollar. And between 1998 and 2007, they had hundreds of thousands of people use the currency, thousands of merchants accept the currency one-to-one with the U.S. dollar, and about $80 million in circulation. Now, in the world of crypto, $80 million seems very small. I mean, that's half of what the Ethereum DAO did in their fundraising, arguably the first ICO. But for a physical currency, that was the most successful alternative currency in the United States ever. And part of that was in 2003, he launched a digital currency, the electronic Liberty Dollar, known as ELD. And if you look at the historical precedent for digital currencies at that point, before they were known as cryptos, there was DigiCash, which is quasi a currency, and there was eDollar, which is also quasi a currency, which was founded in 1996. And so in 2003, when he launched the Liberty Dollar, it was really the first kind of currency that had been around before the digital version, and then created a digital version. So he was able to prove a model that worked very well. And really, that's what we're doing with LD2, is we're taking that model that worked for 10 years and updating it and upgrading it with crypto. And so we did our first version as an ERC20 token on the Ethereum blockchain. And now we're moving to EOS for our second version, which is an open-ended silver-backed cryptocurrency, LD2 Silver.
And so are people from the Ethereum tokens going to be able to, you're going to port those over to EOS when ready, or how's that going to work?
Yeah, we haven't exactly determined how we're going to do that bridge, maybe is a better way of describing it, between the two chains. At the moment, the ERC20 tokens are standalone, and we're working on developing the EOS token right in the smart contracts right now. So at some point, there may be a port or a bridge between them that we create. But at the moment, our focus is getting the EOS version issued and up and running. And, you know, the ERC20 tokens are, you know, in every version of LD2, every digital token represents 1 ounce sitting in the vault. So the ERC20 token holders can always redeem that token, basically a warehouse receipt, for the physical silver if they want. So they're not necessarily stuck in that token, but we do appreciate the need for either a listing on EOS DEX so that people can exchange it, or doing some sort of port or bridge, as you mentioned.
Mm-hmm. Yeah, and I guess I mean, in time, the ability to expand this idea into any, like, multiple coins isn't unfathomable. It doesn't necessarily tie it to just one coin. So how's the actual process work? It sounds like, so you have a fully insured vault, and for every Liberty dollar coin, you have 1 ounce of Troy silver that's audited and that is in the vault, and that people can redeem on the blockchain for actual silver, or they can just trade on the blockchain. That's kind of the gist of it, right?
Exactly. And so, you know, the LD2 ERC20 token was really made as a proof of product, right? So that we could address all the issues and make sure we had a working product, which is why we limited that issuance to 10,000 tokens, which is backed by 10,000 ounces. So the way that structure works is, which will be exactly the same way that the EOS structure works, is you come to our website, you come to ld2coin.io, you decide how many ounces of silver you want to buy. You buy the physical silver with the Ethereum, with Ether essentially, and this will be the same with EOS, but using Ethereum as the example that we have up and running. You would buy the silver with Ether. We would then send you into your wallet the LD2 0 token, and that token is a digital warehouse receipt in the form of an ERC20 token. And so you have already purchased the physical silver, and now you have the receipts in the form of those tokens. So you can exchange those tokens and trade those tokens between your wallets, obviously, and the ownership of that silver goes with it. If you choose to, at any point, whoever is the bearer of those tokens can then ask for physical redemption of that silver they've already purchased. And since they've already purchased the silver, the only cost to them is the shipping from the vault to them to get that physical silver. And that redemption is actually very, very important into the economics, the tokenomics, if you will, of the LD2 system, because being able to redeem as low as 1 ounce or 1 full token creates a price floor for that token. So what I mean by that is, there is a price. Let's say silver is selling for $15 an ounce, right? There is a price that the market will determine of where it makes more sense for the token holders to take physical redemption of that silver and then sell it for the $15, instead of taking $5 for the token itself on an exchange. And so we've created this kind of market-driven price floor of where the physical silver buoys the price of the token because nobody would take less than the value of the physical silver, while still allowing for appreciation in that token.
Mm-hmm.
So whether that be through speculation, which is how I would describe the price of Bitcoin and Litecoin and other altcoins being driven, or the underlying value of the silver going up would also drive the value of the silver. I mean, it's the value of the token, excuse me. So the physical redemption seems like kind of a afterthought, and a lot of the other silver and gold-backed cryptos don't pay much attention. It actually is very critical in creating the market-driven price for the token itself.
Yeah, I mean, in a real easy example for people trying to wrap their head around that is if let's put me for example, and your LD2 is trading on an exchange, price of silver is $15, and I would just have orders sitting at $10 or maybe $12 constantly. If anyone ever wants to sell me their silver for $10, then I will buy it, and so the price will never drop below that. And then as that happens, I'll just send in the redemption to you and be buying $10 silver bars,
Right, and you're taking advantage of that in your example, that $5 arbitrage per ounce, right? And that's really why the redemption is important, but also so is the auditing. So we do monthly independent audit by an independent CPA firm. And the way we built the smart contracts was they're essentially a multi-sig of where you need all three signatures, the issuer, the vault, and the auditor, to acknowledge what the actual physical holdings in the vault is in order for us to issue tokens. So the number of tokens is always maintained in one-to-one parity with the number of ounces in the vault. And if we ever fall out of that, then the independent auditor would issue their report and everybody would be able to see that there wasn't the silver backing up the number of tokens, and so forth.
And then you're burning tokens essentially as if I redeem my token for some silver, then those tokens get burned, I'd imagine. That's how that works.
Exactly. We would burn all those tokens as they come in. So when you do redemption, you would essentially put in your address. We would give you a quote for how much the shipping is. And we're not taking any premiums or anything above that. That's our cost because you already own the silver. This is simply just delivering it to you. And then you would send those tokens to a burn address, and those would be essentially destroyed, and you would get the silver because you either have the silver or you have the receipt. You can't ever have both, given the way our smart contracts are built.
And how does it work, like with increasing supply? I guess people can buy the tokens from your website. At some point, do you expect people to kind of stop buying them from your website and just trade them on the open market? Is there a cap of how long you're going to create for, or what's that look like?
So for the first version, LD2 0, the zero version, essentially, we bought 10,000 ounces worth of silver, and we issued 10,000 tokens. Okay. And so that's a hard cap, never going to be anything beyond that. We also used a never before publicly available 20th anniversary of Liberty Dollar coins designed to actually back up those. So there's a collectability to actually the physical silver that you would get for those tokens, or that you buy up front, maybe is a better way of putting it. So that version is a hard cap. 10,000 ounces, that's all we're ever going to make. We're never going to do anything more. With the new EOS version, the silver version, as we describe it, it's going to be an open-ended issuance. So it's more along the line of Tether, even though I am remiss to bring them up, given a variety of reasons we won't necessarily get into in this conversation. But as we obtain more silver, we're going to issue more tokens. And so it becomes kind of a different version, if you will, a different reality, because there's no hard cap to it. It's an open-ended issuance. And so as we buy more silver and have the financing to do so, then we will issue more tokens given the silver that we have added to the vault.
Okay, so the first 10,000 you had minted yourself and their Liberty Dollar 2 tokens or actual silver pieces, but after that you can just buy silver in bulk basically and make sure that it's that it's redeemable for people.
Exactly. So
Okay.
we've partnered with the largest silver supplier and producer in the country, who does all the silver for the U.S. Mint and for the South African Mint and the Canadian Mint, and they do, billions of dollars of silver every year. So we've partnered with them in order to have the capacity and the scale in order to add new silver to the supply and therefore create new tokens in that supply as well. And so the plan is to add different tranches to that. Part of that is we need the financing to buy that silver. Part of that strategy is the price of silver changes over time, obviously. And so we need to be able to adapt the issuance price for those tokens to the actual price of the silver that's underlying it. So hopefully with the right financing partners and the right exchange partners, we can build up the liquidity within that token and add, $1 million, 10 million, 100 million, whatever the number is at a time, and eat up that market that is interested in buying our tokens at our issuing price instead of at whatever the market or exchange price would be.
Okay. Yeah, it seems stable coins, everyone's trying to build, or a lot of teams have tried to build stable coins at this point. What do you think the big drawback, or why have so many people failed at the stable coin? You've got the Steam stable coin, you've got Tether, you've got
USDC, you've got True Token out there. Well, I think it's a couple different things. Part of it is that with any new market and with any new technology, there hasn't been the time to test the models. Nobody really knows what models are going to work with the new technology. And you've seen that and I think we've seen that with crypto, is that some of the models, token models, don't work. So first of all, what we have a model that existed for 10 years. So we know what the ups and downs of that model looks like and how successful that model can be. Related to that is that my co-founder and I were both very involved in that model in Liberty Dollar. So we know that as well. So I think part of it is people coming into crypto wanting to do a stable coin don't have the expertise or the experience in really knowing how something like that operates and what are the weak points or the trigger points that are going to drive that success or failure. And that's just the reality of not having an existing technology for a long period of time to work out, right? So I think people get into it thinking, oh, this is going to be easy. This is going to be, a stable coin that I can build, and whether that's backed by fiat, like the US dollar, or backed by gold and silver, their operational experience is limited, right? And not only their operational experience in a specific area is limited, but I think their finance experience or their banking experience is also limited in certain aspects or instances, should I say. And so you're trying something for the first time that has that higher degree or higher likelihood of failure, and you're not addressing all the problems because you don't know what the problems are. And I think that's why a lot of stable coins go with fiat, go with US dollars, because on its face that seems like the easiest solution, right? All I need to do is have, if I'm doing a US dollar backed, for example, right? All I need to do is have this number of dollars sitting in a bank account, right? Which, begrudgingly referring back to Tether, is one of their problems, right? Is that they should be able to pass an audit. if they are really one-to-one backed as they claim to be, that should be the easiest situation. A physical asset like silver is a little more difficult because you need the vault and you need the physical assets to be there and so on and so forth, right? So I think that's why stable coins in general, and I have to point out that stablecoin means different things to different people, is kind of a victim of the people doing it to an extent, right? I mean, when you look at something like Basis, which raises $133 million and then shuts down 6 months later, it's like, well, how did you not make $133 million in funding work?
Yeah.
Right? I mean, I would love to have $133 million sitting in my account to buy silver with. So I think that it's a symptom of kind of an early market where you can't test models, and I think it's an example of what people who aren't in that industry get into without really knowing the industry and knowing what the pitfalls are going to be. And I think those are probably the two major problems or drivers of those issues.
Yeah, and so it sounds like obviously the vault and purchasing physical silver and that whole infrastructure is a big barrier to entry. So people say, okay, well, I'm just going to go with fiat. You know, that all happens in cyberspace and is numbers on a computer. That's a pretty logical leap for me to make. I could see that. That being said, so Tether's done that. That being said, if let's say Tether had done it better and they were auditing, they had fully transparent auditing, and you could see that there was $1 for every token, which we know that we can't see that. But let's say someone did that right. What's the problem with using USD backed?
Well, I mean, you know, it's a little bit about what your philosophy is to a certain extent, or what your opinions on monetary policy are, you know, that are going to drive that. For me, layering crypto on top of fiat is not the solution. I mean, you're dealing with an underlying quote unquote asset in US dollar that is inherently inflationary by its very nature, that it's a debt instrument. You're losing purchasing power. I mean, between 1913, when the Fed was put in place, and 2013, the first 100 years, you lost 97% of your purchasing power. Meaning what you could buy with $1 in 1913, what you could buy for 2 cents in 1913 would cost you $1 in 2013, right? That is the nature of the monetary policy of the U.S. Mint, of the Federal Reserve, of the ECB, of all the current monetary policy executors, if you will. And so to layer crypto on top of a inflationary device, to me, is not solving the problem. It's just you're adding new technology to something that is inherently flawed. And you know, it's that old developers saying that I know from years and years ago, right? Garbage in, garbage out, diamonds in, diamonds out, right? If you're putting garbage with fiat into your crypto, you're not solving the problem, right? And to me, even the idea of a pegged currency, a pegged cryptocurrency, in and of itself is a manufactured device. It's a manipulated instrument, because the only way you can keep that one-to-one parity or pegging is to manipulate the supply of the tokens. And I think that's why Tether had to partner with somebody like Bitfinex, where it has the ability to bring tokens in and out of supply in order to keep that pegged to what it is. And so you're starting with something that's flawed, and then you're adding in manipulation in order to maintain that pegging to a flawed device. And while I can certainly appreciate what Tether has done in terms of building a business from 0 to 2.5 billion in circulation in 5 years or whatever it's been, which is very impressive. I think that it's something that you and I discussed before we got on the air a little bit, which is first movers aren't always the best.
Mm-hmm.
You have to learn from the errors of the first movers and see what they did wrong and what their problems were. And so second or even third movers can see that and fix it and come out with a better product. And so, well, like, again, I really respect what Tether had done, because that's a very difficult business to build. And I'm sure having Brock Pierce be one of the founders and developers of that speaks to why it's been able to make it as far as it has. But I don't think it has the long-term longevity that other options like LD2 have.
Mm-hmm. Yeah, it's from a risk perspective, it is risky too. It's not something you want to put your money into and leave it there. Someone would be crazy if they said they were going to put their money in Tether and leave it there for the next 10 years. Because
right. Well, also, and again, to that point, it serves a purpose. If you want to get out of a crypto position into something that you're not going to be able to lose value in. So if you want to realize your appreciation into Tether and then get out into US dollars, I completely understand that. Mm-hmm. There is no doubt that is the best use case for Tether. Right? Yeah. And I think that is why it's seen, especially in 2017, when the market was just rocking and rolling, that you saw the biggest increase in volume in Tether. Was because people were looking for some way to protect their appreciation, to protect their earnings, and that was the best mechanism to do so. Mm-hmm. But I think that use case still exists, but there are better solutions now, where Tether was really the only solution at that point in time.
Yeah, and and it's funny because you talk about being tied to the U.S. dollar, and it is almost like at this point when it transferred to fiat becomes just an agreed consciousness that we're all operating on. But there's nothing really tied that makes it. There's nothing tethering it to the ground, to earth. It's just this thought. And then, so you're taking the thought of a dollar and then putting the thought of a stable coin on top of it. That, I like the idea of there being something actually tethering this to the earth. Like, no, there's like this physical thing that you can say, like, it's redeemable. Like, it keeps us grounded a little bit. And for people who don't know what I'm talking about, everyone I'm sure does, but and I think it was 1971, Nixon took us off the gold standard, and ever since then we've had fiat currency, which has been one of the greatest experiments in money probably in the history of the world. So
especially at this scale. I mean, nothing has been done at this sort of scale. Yeah. In terms of fiat. And to your point, if you want something to get out of, if you want a different position to get out of, then for a short period of time, then yes, USDC, Tether, all serve that purpose, right? But like you said, you wouldn't hold Tether for 10 years. And part of that reason is because the underlying asset is eroding, right? Mm-hmm. And with something like LD2, where it's backed by silver, and this is true of any, asset-backed crypto, is that you have the ability for appreciation over that time, because the underlying asset has the ability to appreciate. Right? Fiat has no ability to appreciate. So, it's really, as with any kind of investment or financial device you get into, the first question is, what's your horizon? Mm-hmm. Right? How long do you want to hold this for? Where do you expect to get out of this? Those sort of things, right? So, there are certainly the functions for those stable coins, for those fiat-backed stable coins. But that's only if your horizon is a week, a month, mm-hmm. A year at most. I think even a year is stretching it. But if you're looking for something that is a little more long term, and I know in the world of crypto, long term is, I mean, 5 years is, long term.
That's real long. That's real long. Yeah.
If you think about, you got in 2014 and you're
Mm-hmm.
still holding something in now, you've probably done pretty well.
Yeah.
You've ridden the ups and downs, and you've probably done okay. But that's only if you are willing to take that time period, and you don't need to get out.
Yeah, an interesting concept that comes up when you say that is that this facilitates the ability to not have to exit to US dollars for a longer term, because let's say 2017 you had let's say at any point you've made money in cryptocurrency and you want to exit. A lot of people they're scampering to exit to US dollars because there's nowhere really safe to go if you are wanting to hold for 10 years. Like, none of these cryptocurrencies could you predict will be for sure around in 10 years, or that have a good chance. Like, if you want to take earnings and then make them secure, you really have to go to US dollars or to silver or gold. That's what people do. This is a way to keep it within the crypto ecosystem, but tie it to silver. So you could be safe. I've got earnings, boom, put it there and just leave it there for a few years, and not have to worry.
Yeah, definitely. And I think that, we want to be kind of that trust option, and that's why we're very mindful about transparency, which is why we do everything on chain. Using the ERC20 token as an example, all the smart contracts are audited. They're all public. Everybody can see what we're doing. Every transaction is public. The audit reports are public. The audit reports are put on chain as well. So we're trying to kind of play that role, that trust role. And, again, our silver partner who does the vaulting as well, has been around for 50 years. They have dozens of government contracts all around the world. They're not going anywhere.
Mm-hmm.
For us, it's also a matter of the jeopardy they face by losing their government contracts, which is multi-billion dollars a year, makes the idea the operators would abscond with our silver like inconceivable.
Mm-hmm.
Like, why would they ever do that? Right? We're a drop in the bucket in their business. Right? And I think that's what you see with a lot of cryptos, especially in the exchanges, is that the operators have short-term goals, if you will, right?
Mm-hmm.
And they're not necessarily thinking about it for 10 years, 20 years. How long are they going to hold these tokens for, right? And so, again, going back to the kind of transparency we offer is, our tokens are UCC contracts. So under the Uniform Commercial Code, if you buy a token from us, you have a contractual relationship with the vault. And this is in the terms of the smart contract, where the vault will always honor your tokens for redemption of the physical silver in perpetuity. And we have prepaid the storage of the silver, and we will continue to prepay that for 10 years. And when you buy the silver, so we're not going anywhere. The vault isn't going anywhere. Even if LD2 went away and we disappeared, as what happened with my father's business with Liberty Dollar, there is always a contractual obligation to be able to redeem your silver from the vault. So we are taking much more that long-term kind of value, which also is part of the reason of why we haven't been doing a lot of PR. We haven't been trying to hype ourselves up in a way. Is because we want to make sure we're building something that has a strong foundation and people can trust for the long term. So whether they want to get in for one day and see the appreciation, or they want to get into silver now, which is a great time because silver is super cheap historically at $15, we want to be that solution for everybody who's looking for that kind of product.
Mm-hmm. What is the market for something like that? I know that when there's downturns in the stock market, or when there is a little bit of fear in the general market, that gold and silver pick up. What's that? How big is that market? How big is that need?
So you're absolutely right. I mean, silver and gold historically have always been a hedge against, equity market downturns or bond market downturns because it is a more stable market, for lack of a better term. So that's certainly one aspect of who we want to attract, but a lot of those institutional investors who are looking for that kind of hedge have ETFs, they have future contracts, they have other devices to them. Now, there's fault with those devices, I would say, or those instruments. And I would say that LD2 can fill that role because we are physical ownership of the silver. So you never have to worry about having paper ownership like an ETF, where you're not actually buying the silver or the futures, you're not actually buying the physical asset underlying it. But I think our focus is much more on the crypto market because generally speaking, it's a much more volatile market. And not only is it much more volatile, as we've seen from 20,000 to 3,000, now back up to almost 9,000, right? In a year or so, a year and a half maybe. We think that the volatility of the market creates a much bigger need for something that's stable and a much bigger need for something that is transferable in a very easy way. I mean, going from your whatever your crypto holdings are to Ether to LD2 in the zero version is a pretty frictionless transaction, right? If you're going crypto to crypto to crypto, there isn't a whole lot of friction you have to deal with in terms of expense or problems or so forth, right? And so we still think that providing that opportunity to crypto is where our kind of focus is. Now, I would love institutional investors and hedge funds and stuff to say, this is a great option for physical silver and let's get into it. But at the moment, I like serving the least serviceable people, the least serviceable market to a degree. And I think that's where crypto is that people need something because, all the crypto, all Bitcoin, all the altcoins are very highly correlated in price, ups and downs, all go together. I just don't think that there's the same opportunities in crypto that there are in the traditional markets. And so I'd like to serve that market. I'd like to serve that market that's underserved. And especially because, as we discussed earlier, I think that's a market that more philosophically aligns with my own values and the type of individuals that I want to participate with. I mean, I was in banking for many years and in investment banking for part of that. And those guys don't need help. Those guys don't need new products. They're gonna do their thing, whether the Bitcoin, blockchain, whatever these things exist or not. So I don't know. I mean, maybe it's a little bit of a personal bias, but I'd rather help the people that I more in a very simple way, right? I mean, and who need it. And who are building what I see as, the monetary foundations of the future, right? Going back to my dad's case for 1 second, as an analogy, when my father was arrested and ultimately convicted of counterfeiting, the idea of using the word coin was legal jeopardy because the word coin meant a government-issued product. And nobody used coin except for the U.S. Mint. Bitcoin, Litecoin, Dogecoin completely changed that paradigm. Coin is now so corrupted as a word that the U.S. Mint and the U.S. government cannot protect any longer. Those are the type of changes I like, that I appreciate, and that I want to see. So I want to support the individuals who are doing that sort of things, similarly to the way my father pushed those bounds, right? So, to summarize, I want to focus on crypto, and I want to focus on the crypto market, right? And I want to help those who have the least ability to help themselves, not the investment bankers and the traditional institutional investors who have the most ability to help themselves.
Mm-hmm.
And eventually they're going to find their way into this market because they're missing out on gains. They're missing out on ROI. They're missing out, most importantly, on alpha.
Mm-hmm.
And eventually they'll get here. But, that's the way it is, and that's just kind of my outlook on things,
Mm-hmm.
And people may not agree with that, but I'd rather support a community that supports me instead of one that completely rejects me for their own selfish gains.
Yeah.
And
it's cool. I mean, Liberty Dollar too. It's cool that shout out to your dad who was, Liberty Dollar is such a great name. I mean, that's what it is. It's this erosion of inflation that essentially attacks and, killing the value of money that we make. And a Liberty Dollar is a great name. Can you tell a little bit more about that story? How, it sounds like he was running the business for quite a long time before the feds came in and decided it had gotten too big or it was competing. What was that situation like?
Yeah. So, I'm glad you asked. That's a good piece to bring up because a lot of people don't know the real story.
Mm-hmm.
And there's a lot of misinformation out there about what actually happened. So 98 he starts it. 2003 he does a digital version, starts taking off. Digital version was very, very successful as compared to the physical version, the physical certificate, should I say. And so he starts negotiating with bigger companies. People start finding interest. There's a lot of local news stories about Liberty Dollar because my dad would drive around, come into town, start talking to merchants.
Mm-hmm.
Somebody would hear about it in the news, and they would do a local news story about it. And a lot of those news stories included the reporters themselves going to the DOJ or the local FBI agents or the Secret Service and asking about legitimacy of Liberty Dollar. And in literally every single instance, the law enforcement that was interviewed said totally legal. This is a barter system. This is illegal under federal law, legal under state law. People can use it, no problems at all. But the problem is that it started getting very successful. And they started being some very large corporations, which I won't mention their names, but very, very large, some of the largest corporations in the country started taking interest in it and seeing that in their retail operations, they could find a profit here. Because they could take it one-to-one with the U.S. dollar, exchange it for silver, sell the silver, find a return on that. So in 2007, the U.S. Mint, for the first time, sent a letter to the Liberty Dollar, to my father, saying, we've reconsidered the legalities of what you're doing. And we think that you are running afoul of the law. And we believe that you are a fraudulent operation, a Ponzi scheme, essentially. And so in response to that, my father sued the U.S. Mint and said, I want a federal judge to come in and make some sort of determination on what the legality of this is. Mm-hmm. It had never gone to court. No one had ever sued my father or the organization. And so he sued them in federal court in response to a letter telling them to shut it down. Well, that case never came to trial because in November of 2007, instead of going through the judicial process, the FBI raided the vault in Idaho. And if you read the court documents, it's pretty clear that the FBI showed up at the vault not expecting there to be any silver or gold backing up the currency. They thought it was a completely fraudulent operation where he was taking money for people, giving them a worthless piece of paper, and so on and so forth. What they found was 7 tons of silver and gold in the vault.
Oh my God.
And the vault operator was basically like, where is your truck? And they were like, we don't have a truck. And he was like, well, how are you going to move all this silver and gold? And so starting from the raid, that essentially destroyed the business. Because now all the silver that was backing up the currency had now been confiscated. Now it turns out that the FBI really had nowhere to put all that silver. And so they left it in the vault and paid the vault operator to leave it there and take care of it for them. So it was between 2007 and 2009, when my father was actually arrested by the FBI, that they actually figured out what to charge him with and how to charge him with a crime. And the crime they charged him with, which is Federal Penal Code 486, which is 2 sentences. It was written in the 1840s. It was meant to keep the Confederacy from creating its own currency during the Civil War. And basically what it says is, if you create a competitor to the US dollar and promote it and market it as a competitor to the US dollar, you are, by definition, counterfeiting. And not the traditional counterfeiting, where you get something for free. I go into a store, I give you a fake $10 bill, I get a pack of cigarettes. You're now at that pack of cigarettes. You've now lost, I've gained, right? This is counterfeiting in the sense of you are competing with the US dollar by definition. So he was arrested by the FBI in 2009. He was eventually convicted of 3 counts of counterfeiting under 486, because essentially the law says that if you do what he did, you were counterfeiting. And so he was convicted, and the prosecutors asked for 22 years in prison, which, being for somebody in his early 70s, would have been essentially a life sentence. They then went a step further, and they tagged him as a domestic terrorist, which then add 50% to your sentence. Wow. So they were originally asking, they were finally asking for 33 years in prison for my father. The judge delayed sentencing for 3.5 years in order to properly assess what the situation was. And eventually, he sentenced my father to 6 months of house arrest and 3 years of probation. Probation actually got cut down to 2 years because he didn't violate anything during that time, and he was essentially released out of custody in 2017. So 10 years went by from when they raided the vault and basically destroyed the company in 2007 to when he finally got off of probation.
Wow. That's that is, even though it ends with 6 months of house arrest, which, when you say it like that, it's like, oh, that's not that big a deal. But 10 years of, I can only imagine the drama during that 10 years dealing with the government for 10 years and being basically, that's akin to being in jail. It's not easy to be dealing with the government like that for 10 years, and especially waiting to be sentenced with that kind of sentence hanging over your head. That's a long 10 years right there, man. That's crazy.
Yeah, and sitting around for 3 years thinking that you're going to go to prison for the rest of your life, but you haven't actually been sentenced yet. Well, it's particularly egregious. But the finality of the case is actually quite positive, which is that the federal judge, Judge Voorhees, determined that but for the actions of the FBI, the owners of that 7 tons of silver would have been able to redeem their silver that they already owned. And so what he forced the Department of Justice and the U.S. Marshals to return all of the silver that they had confiscated.
Okay.
So about 600 people filed petitions with the court in order to get their silver back.
Mm-hmm.
And so some people got 1 ounce of silver back. Some people got 15,000 ounces back. Hundreds of thousands of dollars of silver that they had purchased that was sitting in this vault, or sitting in evidence in Dallas, where the U.S. Marshals held it all. So, if you were an individual who held the silver, who bought the certificates and had the silver, you could get your silver back then through the petitions. And up until this day, and for going forward, my father still honors those certificates. So there was a 20-year term on the certificates. excuse me, there was a 10-year term on the certificates. And so if you bought a certificate in 2006, a 20-year term. So if you bought a certificate in 2006, you have the right up until 2026 to actually get your silver back. So the DOJ and the marshals were tired of holding this, and they weren't going to do redemption. So they returned portion of that silver to my father in order for him to fulfill his contractual obligations that are on the back of every Liberty Dollar certificate. And so we at LD2 have done the same thing. So when you buy an LD2, buy silver, and you get the token, we have guaranteed you prepayment of that silver in this vault for 10 years.
Mm-hmm.
So that if there's people out there who are Liberty Dollar supporters or owners who want their silver, they can certainly go and contact my father and do so. And we hope that Liberty LD2 purchasers can see that that is the worst case scenario. And because he worked through the worst case scenario, we know how to work through it in this best case scenario. Mm-hmm. And so we will never let those sorts of, the point being this, is that even with all the legal problems that Liberty Dollar found and my father's conviction, even in that worst case scenario, there was not a single person who lost their silver. So if the legal realities exist for those people to be maintained and kept whole, we can do the same in a far easier situation.
Yeah, and what makes the situation with LD2 easier? What is it that you think got your father caught up with Liberty Dollar 1 that you're not doing with Liberty Dollar 2?
It's actually quite simple. And the judge in my father's case outlined this in his final sentencing memorandum, which is 42 pages. And basically what it says is that the core of the issue is whether your currency can be mistaken for a government issuance.
Oh, okay.
So Liberty Dollar doesn't sound distinct enough from a government issue. You could confuse people that Liberty Dollar is a legitimately government-issued product, currency.
Mm-hmm.
No one in their right mind would ever consider cryptocurrencies to be a government-issued issuance, mm-hmm. right? So it comes down to, are you marketing it as a competitor to the US dollar? And is there ability for you to confuse this product for a government product? The idea that somebody would think that Bitcoin, Litecoin, LD2, any cryptocurrency is government issued is ridiculous. Right? Yeah. I mean, it is the antithesis of a government product. Uh-huh. Right? It is a complete rejection of government involvement, right? Mm-hmm. And that's why Bitcoin, Litecoin, Dogecoin, all those altcoins would never find themselves in the same legal jeopardy. But that never would have been legal precedent unless my father's case had run its course. Mm-hmm. Mm-hmm. So for someone to come after any cryptocurrency, including LD2, they would have to prove to a jury that it is reasonable that you would confuse this with a government issuance. Mm-hmm. And the unlikeliness that some prosecutor would be able to do that is the reason of why you don't see prosecutions on Liberty on any cryptocurrency under this same statute. Mm-hmm. Mm-hmm.
Yeah, so that makes a lot of sense.
That's really why we feel comfortable that we can use the LD2, the Liberty Dollar operational model of the vaulting and the redemptions and the auditing and all those sort of aspects with the new technology of cryptocurrencies and EOS in particular, without finding ourselves in any particular legal jeopardy that he found himself in.
Mm-hmm.
And part of that is because he never knew that was the line, that was the standard that he would be held against. And there are certainly instances where my father and Liberty Dollar went too far, where their marketing wasn't specifically distinctive enough to make it clear this was not a government issuance. And one of the big pieces of evidence that they used against my father was a segment he did for the Learning Channel, where he goes around DC and buys souvenirs with his Liberty Dollar. And he never explains to the merchant that he's buying the souvenirs from that this is a private currency, that this is not a government issuance. And because he didn't, and it was on film, that was one of the major factors that led the jury to believe that he wasn't making it clear and that he was confusing it with a government issuance. So the legal landscape between what my father did and what we are in today is completely different. And that's why our familiarity and our expertise in this leads us to know that we will not be in that situation that he was in.
Mm-hmm, mm-hmm. Yeah, I can see a pretty clear difference there. And I mean, so I haven't seen a Liberty Dollar. I'm sure people can Google them. Are they like the size of a US dollar, or like they're a piece of paper type of thing?
Yeah, you can Google the images and you can see them. He never used green ink,
mm-hmm.
because green ink is associated with the U.S. dollar. So they were blue, they were purple, they were red, but they were the same size. They never had a president on them. They always had the Statue of Liberty. And so if you saw a physical dollar, if you saw a physical LD2 certificate, you would know the difference.
Yeah, and it says warehouse receipt on it, really giant too.
Right, and there's some holograms on the corners. There's gold foil on it.
It looks like Monopoly money, basically.
Right, yeah. and that was the point, right? The point was that he was worried about counterfeiting in terms of it's looking too similar.
Yeah, for sure.
He wasn't thinking about counterfeiting from this obscure law from the 1840s.
It's competing. Yeah.
So if you went to a store and you handed somebody a Liberty Dollar certificate, and I see you're looking at them now,
yeah,
you would know the difference. Somebody would look at that and go like, "Wait a minute, this is not what I." Look at that.
Well, because when you said that he handed it to merchants and they just accepted it and he didn't explain, I was like, oh, well, does this thing look like like if I was a store clerk, would I just accept this? For anyone who's just listening to this, you would not just like take these in and be like, oh, thanks for the money. It's like, this looks like if someone handed you Monopoly money, you wouldn't be like, oh, thanks. You'd be like, what is this? What's going on?
Right, right.
Why? Yeah.
And to that point, that was part of the marketing campaign, right? Was that he used it as an opportunity to start a conversation with the merchant, right? So here is something that you don't recognize and you don't know what it is, but let me explain it to you, and let me take the opportunity to see if you want to accept it. And he had about 350 regional currency officers, as they were known, RCOs, that were spread all over the country. So you could go to the RCO with this currency and you could get fiat back. You could get, US dollars back, or you get the silver back, because he never wanted anyone to be stuck with something that they didn't want.
Mm-hmm.
And he didn't want them to be out of the money that they took it for. So even if a merchant did accept it and eventually decide they didn't want it, they could go to anywhere in their region. And again, there was 320 spread across the country, so you didn't have to go far. And you could get your US dollars, or you could get the silver for it, so that nobody was left holding the bag, for lack of a better expression.
Mm-hmm.
And that was part of the issue of the trial, was that when they originally were trying to charge him with fraud, there were no victims.
Mm-hmm.
And given the length of time that the U.S. government held the silver that backed up the currency, the price of silver almost tripled during that period. So most people who were involved, even though they couldn't access their silver, when they could, they were up. Everybody made money.
Mm-hmm.
It was more valuable than when you bought it. So there wasn't any victim statements. There wasn't any victims complaining in the courthouse, which is why the fraud charges against them were dropped, including wire fraud and bank fraud, and only the counterfeiting with this obscure law was the only one that held up.
Yeah, and it looks like on Wikipedia it says guilty of quote unquote making coins resembling and similar to United States coins. So
that's actually not entirely accurate.
Okay.
Because the second sentence in Statute 486 says that the competition with the U.S. dollar is the only factor that matters.
Okay.
The similarity or the resemblance to a U.S. dollar has no impact on whether you're committing counterfeiting or not.
Interesting. Okay.
So even though he purposefully tried to make his currency look different, to not fall under the counterfeiting laws,
okay, it
was eventually that the counterfeiting laws that said that it didn't matter what it looked like were the ones that actually got it.
Interesting. Yeah. Okay. It's very nuanced. I mean, one of the things that comes up in my mind is kind of like, we're always playing with fire if you're ever competing with the government, you're playing with fire. And because it's ultimately laws or no laws, like the federal court system is a very, very easily manipulated, and they use it. They wield that power pretty ruthlessly. So, this brings in, I didn't get a chance to verify this article, so forgive me, but I saw that the Indian government proposed a bill to ban all cryptocurrency with a 10-year sentence if you're holding, transacting, or even have cryptocurrency. I wonder.
That's pretty serious.
Yeah,
I know the. I'm sorry to interrupt, but I know the Indian Central Bank, the Fed of India, has for years said that cryptos are illegal.
Yeah.
And for years said that cryptos couldn't operate within India, right? Which is pretty monumental when you think about it, because think about how much impact China has on the crypto markets, and how many players and how much is held in China. Imagine if India, with its insanely large population and technical savvy and financial savvy, had been able to come into this market.
Yeah.
Who knows how much more funding, cryptos, tokens, use cases would have come in if that sort of population was allowed to participate in this market.
Yeah, I mean, India is an interesting case study because they're really heavy-handed with their monetary policy. I think that they're the country that removed all the big bills out of circulation.
Small bills.
No, they removed all the small bills out of circulation.
Bills. So it was the 10 rupee dollar bills that they took out. And
that was to force people onto their digital currency. Is that right?
I think part of it was to cut down on the black market, apparently, because a lot of crime syndicates were hoarding those bills as one of their big instruments of power. And so by devaluing those bills, those certificates, they were able to undercut the power of those crime syndicates and force people into more traditional regulated accounts and so forth. But yeah, I mean, they've definitely taken a very, let's say, aggressive approach to how they manage their money supply.
Yeah, I've been working on I've been thinking through this article. I've written a bunch of it, but it's kind of about the coming consolidation and routes that might take, as far as, there's lots of cryptocurrencies, lots of experiments out there right now. Inevitably, governments, companies, just groups of people are going to try to consolidate coins, power, money into kind of more, they're not necessarily centralized, but like get everyone using the same thing. And I'm wondering how that's going to play out.
Yeah, I mean, it's the oligarch, kind of like, approach to a certain extent, but, I think that the general population also doesn't really understand how monetary policy facilitates other types of geopolitical actions, right? I mean, if, for example, in the U.S., right, for the government, to a large extent, money is free, right? It's a debt instrument that they're all saddling the citizens with. And that allows them to spend $600 billion on arms and on the military and be the largest arms manufacturer and dealer in the world, right? And to allow other regimes and dictators to exist around the world using our technology and our might in a lot of real ways. And it's only because, or it's largely because, the U.S. government has that free money to build those arms, to sell to Saudi Arabia or to sell to Brazil or other places, that it really come where the rubber meets the road, right? And so, taking that strength or that ability away from the government or away from those powerful industrial, the military industrial complex that FDR talked about, right? Or Eisenhower talked about, excuse me.
Eisenhower learned about, yeah.
Yeah, exactly. I mean, those are the realities of the monetary policy, right? It's not just loss of purchasing power and inflation and all these things we see, but it's this geopolitical powers. And so, again, going back to, cryptos and such and philosophical alignment of what I believe in, that's a way of eroding that, and by getting people together and saying that, like, you don't have to be in that situation, you know what I mean? I think is a very powerful social instrument that we haven't had in the past.
It's hugely powerful, but I really question, because there's a big elephant in the room with the amount of power that being able to print money comes with, and is that going to be kind of released? I would have to believe that the powers that be that control the monetary, or that depend on being able to print money and make and have it have value, are looking for ways to counteract the cryptocurrency kind of evolution here. Because without being able to just print money, if people stop using money, as people stop using cash, and then they can't just print it anymore out of nowhere, that's like their power disappearing. I wonder if there's plans to try to stop that in the way that India has just kind of put down a hard line.
I think there's no doubt that there is, the people want to protect their own interest, right? Especially when you have a lot of power. But I think it's a slow erosion. It's the same way that, when Liberty Dollar was out and was circulating $80 million. $80 million is nothing. That is it's not even a drop in the bucket. You know what I mean? Like, that's nothing. Right. But now we have cryptos, and, today we're at what, 260 billion in market cap of cryptos. You know what I mean? That is a huge monumental change in a relatively short period of time. Now, again, 260 billion in the grand scheme of the financial markets and money supply in the world is a drop in the bucket. Now it's probably a drop, right? But it's an erosion. And I think that, to a certain extent, we're in a paradigm that we think is permanent, but it was only invented 100 years ago, right? The Fed only came into existence in 1913, right? It's not like we've had this from the founding fathers. Yeah,
that's a good point.
So I think that while it seems like a huge problem, I think that it's a slow erosion, like I said, and it's a shift that, generations learn from previous generations. right? And they learn from, what are the incremental steps that the last generations take that now becomes a bigger step and a bigger step and a bigger step, right? So you have to start with, what's that Buddhist saying? The longest journey starts with a single step. That, you could say this problem is insurmountable, but if you never take it on, you never make any progress, right? So, and I think that crypto is also attracting the best minds. The people who want to get involved in monetary policy and changing the system, they're in crypto. They're not in banking. They're not financial services. I've had friends that worked at the ECB and at the Fed. There's nothing going on there.
Yeah.
Right? They're there to maintain the status quo.
Yeah,
right?
They're spinning those same gears that have been spinning for 50 years. And you said 100 and something years, but as far as how long this has been established, actually, like kind of the bigger experiments only since the 70s when fiat was invented and decoupling from precious metals. So
exactly.
It is pretty short lived.
It is. You're absolutely right. I mean, as you mentioned earlier, I mean, Nixon was the one who signed the final order to end the gold standard. You know what I mean? Like, our parents were alive. You know what I mean? Like,
yeah. Well, that's crazy because you think about, this crazy fiat experiment's only been around 50 something years. Bitcoin's been around 10 years now. So, I mean, it's really not that much. They're not that dissimilar in new inventions. So,
especially when you consider that money and gold has been around as a means of exchange for 2,000 years, 3,000 years, 5,000 years, whatever that number is. Right? I mean, proportionally, this fiat experiment is, just as new as crypto is in the grand scheme of things, right? So it isn't this kind of, it seems this intractable situation we're in just because everybody is bought into the same paradigm, but that's not the reality, right? I mean, in 100 years, this is going to look like the very beginnings. The same way that in 1913, if you were around in 1915, for example, or 1920s, let's say, right, 10 years in, you would have been like, well, this fiat thing is brand new. Like, I'm not sure it's going to work. I still have the gold standard, right? You were so uncertain about, like, what was going to work, what the realities were. We're there now with crypto, right? I mean, it's not any different in terms of just getting people engaged, getting people to learn the situation. And that educational burden is probably the biggest one more than anything,
And it's always these smaller groups of passionate people that are pushing technology and ideas forward. The like you mentioned, the Federal Reserve, they're not coming up with anything new. They're just kind of holding on and pushing forward what's already there. Like this it is like it's like if you popped a real small hole in a balloon and air is seeping out. It's not some big explosion. It's just slowly deflating. So, I agree with you there.
Yeah. I mean, the Fed is worried about, like, how can we get ACH payments to be 1 day instead of 2? Like, that's their big initiative.
Yeah.
Like, how can we do same day ACH through FedWire instead of having to use the clearinghouse to do 2 days?
Or more importantly, how can we increase percentage rates by 1% without crushing the economy? That's a more important.
Or even 1/4%. Even 1/4% is like, it's the biggest discussion out there. I mean,
for sure.
Like, you're you're kind of, maybe this is an extreme analogy, but like, you're kind of like rearranging the deck chairs on the Titanic, right? It's like, you move this chair a little bit. It doesn't matter.
Yeah.
Like, there's this whole bigger macro forces that you're not even, like, considering, right? And you only have, like, the smallest level, the smallest lever to try to, like, affect any change. So again, I think, it's a philosophical, mindset, for me, is that, like, who's working on these things? Where are they working? And they're all in crypto. And in my experience, there's many more of them in EOS than there are in a lot of the other cryptos that I've looked into. And you know, a lot of the Bitcoin people, which I know a lot of and I love them, it's a speculative device, right? Bitcoin's not a currency. Can't spend it in merchants, right? It's all about like, how much money can I make on this and how quickly? Has been a lot of that. Not how much better can I make things, or what can I build that's going to increase or enhance society. You know what I mean? And I know that this may sound trite, but, you know, I think that a part of that is, you know, honestly, Brock Pierce. I mean, having that kind of approach is like, when you hear him talk these days, and I've known Brock for years, and we haven't always gotten along. But if you hear him in the last year or so, it's much more like positivity, like, let's build something great, you know, like, let's be optimistic, like, let's just grow and build. And I don't hear that in the Bitcoin communities all that time. They just don't have that opportunity. It wasn't built to do that, right? It was built to kind of, at least it's been used to make as much money as possible. You know, and that's certainly one of the big drivers of why we did the first version of LD2 in Ethereum, but that we're, you know, enthusiastically moving into EOS. You know, so
what's your guys' timeline on getting into EOS and having that kind of getting it set up?
So most of the operational pieces in terms of getting the vault is done. You know, we're building the smart contracts right now. I actually met with our lead developer over the weekend. Our plan was the end of June. That seems like it's going to get pushed back. So, you know, people can still buy the Ethereum version. We still have some ounces for sale if anybody's interested. So smart contracts are in the process. The next big piece we need is partners. You know, I think if there's any ask from this conversation, it would be that people that are interested in this kind of product, whether it be exchanges, which I think is a big piece that we need, because ultimately that's where liquidity is found, and that's where people can get in and out and find new tokens and so forth. So exchanges are a big piece we need. And the other big piece we need is funding, is financing. You know, it's easy to issue a token with nothing backing it because the expenses are very low. When it comes to having to buy an ounce of silver so that we can issue a token, the funding realities and the financing becomes much more critical. We don't want to go down the path of promising people silver that we don't already have. Back to the Tether discussion. So we want to be, and as we did with the first version, right? We bought 10,000 ounces. We issued 10,000 tokens, and people can buy those ounces that we already own. You know, so along those same lines, a financing partner or somebody who can give us a line of credit so we can perpetually buy new ounces and issue new tokens in tranches, similar to the way Tether did with their tranches, would be, you know, the kind of the two big pieces we need, you know. And those are really the two big hurdles we have, you know. And, you know, money would probably solve both of them.
Yeah, well, for sure. Yes. Well, for people who are listening to this, if you know any ways to help with that, then go ahead and do it. You can always reach out in the EOS Podcast Telegram channel, or get a hold of me or Extra. And what's the website again for you for the Liberty Dollar 2?
It is LD2coin.io. And that's where you can buy the Ethereum tokens. You can read our white paper. You can see the audit reports, and you can see what we're planning next with this next big issuance.
Rad. Well, this has been a really fun talk, and we should do it again, have you back on the podcast and see how things are coming along. On my end, let me give a shout out to our hybrid.games. Scott is our sound engineer at the EOS Podcast. He does epic stuff, and he's also an EOS developer. He's working on a really cool project called hybrid.games. It is there. basically, let me just read a bit here. There's plenty of traditional games around for you to squint your eyes and button mash. Let your other senses have a go. By navigating these non-visual sensory inputs, you'll begin finding what are permanent digital items on the EOS blockchain. He's built a game called Spores that brings your other senses into gaming. So it's pretty interesting. And so go to hybrid.games and you can contact them and submit a message if you're interested, and I'll keep you guys up to date. I have a proxy, Mr. Happy Money proxy, where I vote for the best, most transparent, empowering, and building together block producers. EOS Writer.io, our media wing here. I'm partnered with EOS Writer, and EOS Writer has jumped onto the scene as one of the most trusted and well-respected and up-to-date media sources in all of EOS. So check out eoswriter.io if you already don't do that. That's where a lot of people are getting their EOS news these days. That is the end of my ending spiel. You got anything to extra add on there, extra?
No, Brent, I just, thank you very much for having me. It's great to talk about LD2. I will give a very short shout out to CSX.
Yes.
Because I think they're doing some interesting stuff with their first DAC on the mainnet. And check us out at ld2coin.io. And thanks again for having us.
Cheers. Cheers, my EOS podcast friends.
The money is not the prime asset in life.